Hello and welcome. My name is Lunta Di La Paulu and I am the founder of Yetu Accounting and Tax LLC. And today I am going to talk about one topic that is very common, misunderstood by small businesses and entrepreneurs. And this topic is how much it actually costs you to deliver the goods and services you sell. So I often talk to small businesses, entrepreneurs, and actually recently I had a client who reached out to me about the cost of the service they sell. And after we started going through what they consider to be the cost of their service, I ended up pointing out to them that they actually didn't have the full picture of how much it costs to produce the service they sell to their customers. So based on that information, they had to do a little bit more homework to readjust their pricing strategy. So it's really important for small businesses to understand this, to have a better picture of how much it costs them to create, manage, and deliver value to their customers. Because if you do not understand the underlying cost to produce your good or service, you are more likely underpricing your good, and guess what get affected? Your net income, your profitability. And that's part of the reason often a lot of small businesses struggle to stay alive. Some of the most amazing people open restaurants or coffee shop, and they see themselves having to close these amazing businesses because the owners of these businesses didn't really take a time to sit with a professional to give them a different perspective in terms of the costs involved to manage and operate their business. So in this mini example, I am going to share with you about a burger place that is to launch soon, and they are trying to figure out the cost to produce a burger. So a lot of the information that you see here on the screen are just some assumptions, and we're gonna enter some of the data to give you a general idea of how it costs to produce your good or service. So for a service business, for example, it might be a simple approach, not as complicated as a product-based business. For example, a restaurant that I'm gonna use an example here. So this restaurant sells, another assumption, one burger, only one type of burger, and that's what they do best. And let's also assume they are based in Pilsen. So to produce a burger, here are some of the costs that you have to take into account. You have to take into account the direct material costs, the direct labor cost, and the overhead cost. The overhead especially, which is more challenging for people to figure out because it has many details that often are not accounted for. It's relatively easier to determine and to track the direct material cost because you are actually paying directly for the burgers, the buns, the tomatoes, lettuce, and so forth, and you actually know exactly how much it goes to pay your employees based on the number of hours they work per week. So these two are relatively easier to calculate. However, the overhead cost, the calculation is the easy part, but the allocation of this cost to the goods being sold, it's often not included in the cost of the product. And that's one of the biggest mistakes a lot of entrepreneurs and small businesses make. they do not take into account these often fixed costs that will not change regardless of how much you sell per day, per week, or per month. So let's run through this example and enter some fictitious number. So let's say you're planning to sell the burger and you spent about $5,000 to buy the burgers, $2,000 to buy the buns, $500 for tomatoes, $500 for lettuce, $600 for pickles, $200 for ketchup, and $200 for mayo. And you have 3 employees and you're paying them about $11 an hour, and each employee will be working about 40 hours a week. And because they are 3 employees, you multiply that by 3 times 40 times 4 week of labor. So you have approximately 15,800 in wages per month, and you decide to be very generous and you're giving your employees health care, and you are paying $500 per employee, and you have $1,500. So these two already show you that your direct labor is 17,340 and your direct material cost is 9,000. So let's go to the overhead cost, the cost that is not gonna change regardless of what you do, right? So the direct labor will change based on your projection of, okay, we're gonna have to have 1 person or 2 people or 3 people coming in every day by X number of hours, and so is the direct material. So these 2 costs are what we call variable costs. They will vary based on how much you are projecting to sell in your business. Okay, so the overhead costs are often not variable. They are fixed or mixed, a mix of fixed and variable costs. So let's say you're paying $1,200 for rent, $500 for utility, $100 for repair per month, $200 for janitorial services, $200 for insurance, $100 for security, and you are the manager of the business and you take $2,500 per month. You are paying $200 for IT, $200 for miscellaneous, and $200 for supplies. So the total cost to produce your goods is $31,740. So that's the cost, the total cost to produce your burgers. Often this overhead cost is often neglected, is not accounted for. So let's look quickly into the sales projections. So let's say in Pilsen there are about 50,000 people. There is 50,000 people around 5 miles of distance to your restaurant, and you're projecting 0.5% of the people in the neighborhood will be stopping at your restaurant. Okay, and you're projecting to keep your business open for 26 days out of 30 days a week. And you're also projecting that each person who comes to shop in your restaurant will buy at least 2 burgers. So per month, you're projecting to sell about 13,000 burgers. All right. It might be over the edge. It might be lower, but we'll see just for the sake. Okay, let's just put 1 burger for the sake of making things easier. All right. And you are planning to sell each burger, right? You're projecting to sell each burger at $5. So per month, your estimated revenues are $32,500 based on the numbers we have. So if you change any assumption here, your revenue also gets changed. So here, when we go back, we see the number of units sold are based on the estimate you're bringing from the sales tab, right? So when we go to your P&L or profit and loss statement, we see that your projected net income is only 2.34% of your revenue. So let's say you change your estimate, your assumptions, and you decide that you will be selling each burger at $7, and you are projecting to see 1% of the people living around this neighborhood, this 5-mile range, will be coming to your restaurant every day. So based on that, what we also get here, your unit cost decreases, right? If you want to go a step further, you can actually see what is the variable cost per unit, for example, or the unit cost, the direct labor cost per unit, the overhead cost per unit, right? So you have these numbers here that is gonna help you get a better understanding of how much of each direct labor and overall cost are going to each unit you produce, right? So when we go back to our P&L statement, you are seeing different numbers. So the cost analysis is different to your what is called GAAP or accounting, financial reporting, profit and loss statement. In the product cost, our goal is to understand how much it costs to produce a unit. In the P&L financial reporting, our goal is to understand the profitability of the company. Okay, so here two significant numbers we're looking at are the gross profit and the net operating income and loss. So it seems like based on the information we have and the assumptions we have, the company will be profitable. Okay, so this is to give us an example of how, as a small business owner or as an entrepreneur starting a new business, have to think about costs. Your cost of operating your business, of creating product, delivering product to customers, have to be looked critically. You have to analyze it. You have to spend time to understand the cost to produce or to provide your goods and services. If you're not sure about how much it would cost you to produce the goods, you're more likely prone to make a lot of mistakes. So I hope this helped you get a little bit of understanding of how you can sit and consider the different parts of your business and how the production cost impacts your profitability. And if you need help, we're here. We are an accounting and tax and advisory business that helps small businesses with 10 or less employees making less than $2 million a year. And we are your ally to help you succeed with your business. Whether you have bookkeeping question needs or tax planning strategy you'd like to develop to help you save on taxes, or advisory questions, for example, understanding the cost of running your business, or if you're planning to buy or sell a business in the future. So we're here to help you succeed, to help you achieve your goals. Do not hesitate. Our contact information can be found on top here. We put it there for you to be accessible, and feel free to reach us out, and we look forward to hear from you.